All right. Well, good afternoon, everyone, and welcome to that monumental day, 15th of March, 2021. My name is Oscar Joffrey, and this is the day we've been waiting for that I've been telling everyone about, the KoreConnect KoreSummit webinar that brings it all alive. That's right. Today is the official date that we go live with raising up to $5 million for companies using Regulation CF and $75 million for Regulation A+. And today we have two great panelists that we got some news up there, some interesting little bumps that what news wouldn't have bumps out there that we wouldn't need to address. So, but it's still a wonderful day for all of us, the platforms, the broker dealers, and of course, the entrepreneurs out there who are eagerly listening to this today. I'm going to let them introduce themselves before we dive into the topic at hand, which is pretty self-explanatory, but nevertheless, ladies first. Michelle, please take a moment and introduce yourself.
Sure. Hi, everyone. Thank you for being here. My name is Michelle Timish. I am a business and securities attorney. I've worked with small businesses over the last 2 decades to find funding for the funding that they need from investors. When regulation crowdfunding became legal in 2016, I decided to launch a platform. It took me a couple years to wind down my own law practice and do that, but I eventually launched Crowdfund Main Street, which is an investment crowdfunding platform. Our unique take on things is that we are very much about pro-social enterprise. We like to work with entrepreneurs who are using business as a force for good in the world.
Wow, this will be the first time a lawyer has left. This is good. That in itself is a good hour.
Right. And the wisdom of that we won't even get into, right?
No, this is I don't think I've heard about it like that, of course. And Mr. Butler, please.
Yes, so Tom Butler here. I am the chairman at Dalmore Group. We are a FINRA and SEC registered broker-dealer investment bank. We are headquartered in New York and active and licensed in all 50 states. We were founded in 2005. Over the last year and a half, 2 years or so, we've become, I believe, the most active broker-dealer in the country for Regulation A. We now have onboarded over 100 RegA offerings. A growing number of our offerings have become now amongst the most successful RegA offerings in history, meaning that they've raised their full max offering amount and have either gone public or have launched another secondary RegA. Over the last 2 years or so, we have observed what has worked well and not so well for our issuers. And we share that knowledge with first-time entrepreneurs who are considering launching a RegA. With CF at 1,070,000, we weren't too focused on it. But over the last number of months, with the understanding that it was going to 5 million, we recognize that it's going to be a natural first base for many of our RegA issuers, and we got very involved. What differentiates us from a number of the other approaches to RegA and RegCF is that we are not structured as a marketplace. We set our issuers up with their own independent landing page, their own offering page that's not linked to any others. We try to do that at a fraction of the cost so that the issuer could be the sole beneficiary of their own marketing and promotional efforts, where they could direct their institutions, friends and family, press and media directly to their own page, where they could be the only game in town. So that's what we've been focused on. I've done a number of these with you, Oscar, and it's always great to be here. And Michelle, it's nice to share the stage with you as well.
Thank you.
Perfect. So there you go. That's kind of sets the stage. We're going to have a really interesting conversation here regarding RegCF because Etan kind of let it out. There it is. The Pandora's box is open. The broker dealers are in. Look at that. The broker dealers are coming. So this is an interesting discussion for everyone because up until now, the perception was that the only place where you could raise your money is at a funding portal. And now there's another option. It's not for everyone, but at least now companies have two different locations. But let's talk about the regulation at first. Obviously, $5 million is what you can raise. So I'm going to go to you first, Michelle. Just give us high-level points of the regulation from the amendments point of view that are really important for people to capture here so they can understand the significance of it.
Sure. A lot of the excitement was around the raise up to the 5 million. So it went from 1.07 million to 5 million that you can now raise. The other really important key was that investment caps for accredited investors no longer apply. So accredited investors are free to invest as much as they like. And even for the retail investors, the non-accredited investors, the formula has changed so that now anyone making under 107 or net worth under 107 can invest the greater of $2,200 or 5% of the higher of net worth or income, and that's a flip. So before today, that was the lower number, and it really did make a difference. We noticed on our platform that those limitations were significant, even on the retail investor side. We had, for example, an investor wanting to invest $360,000. His cap was 18. So we know that these rules are going to be huge. One of the other things that our clients were really interested in was the new testing the waters rule that allows companies to solicit interest prior to filing the Form C. That's new. Of course, the use of special purpose vehicles. That's a big deal, particularly now that we have the increase. There's also quite a few people taking advantage, smaller issuers taking advantage of the temporary relief measures that allow companies to raise up to $250,000 without the need for reviewed financials. And then the only other thing that the communications have loosened just a little bit. It's still pretty tricky what you can say, what you can't say when doing a regulation crowdfunding offering. But they did go ahead and add the ability to add the percentage of goal when you're doing those tombstone terms communications.
Well, that was a nice little, giving it a good recap. We often forget about the fact that the accredited investor had a cap all these years. We don't talk about it much, but it's pretty significant if you think about it, that you lift the limit to 5 million, and now the accredited investor has also their caps have been removed. And but there is one pretty significant point that needs to come across, and Itan, you and I are dealing with it right now. So why don't I let you be the bearer of fantastic news?
I have a feeling of what you're talking about. Oh, well, look, when you make an assumption, I've always learned that you make a ASS out of you and me. That's how it's spelled. The assumption amongst all of us, and myself included, and all of the major funding portals and smaller funding portals and securities attorneys in the space, and law firms and securities attorneys in the space, in this rapidly evolving regulatory framework that we find ourselves in that's so exciting, was that one of the benefits, one of the benefits of a CF, especially if it's at 5 million, is that you can get to market a lot quicker, and you can get to market a lot more cost effectively, right? Because you don't need to hire a securities attorney to draft the 1A, which is expensive. You don't need to have the audited financials in place. You don't need to go through a multi-month process to be able to get qualified, and then for FINRA to issue a no objection letter. CF, the beauty is you could get to market in a matter of weeks as opposed to a matter of multiple months at a fraction of the cost. And the assumption was that with the increase of for CF of 1.07 to 5, that you wouldn't need an audit, right? Because you didn't need an audit for 1.07, and the assumption was that great, it was bumped up to 5 million, and rock and roll. March 15th, let's get it going. So we and many other portals were drafting our agreements at 5 million. Everyone was signing, and everyone was like lining up to launch a $5 million offering without audited financials. Reviewed financials, of course, for March 15th. And then comes the bomb got dropped, which started off, I believe, on a FINRA or an SEC kind of webinar, and then it was a rumor, and then it was a text, and then it was a mask. It was confusion. I know I was texting late at night with my friends at Republic and WeFunder and Start Engine, of course, Oscar and other attorneys, that we're actually going to issue, first-time issuers are actually going to need audited financials if they want to raise more than $1.07 million for CF. It's still an incredible thing. It just means that we have to go back and we have to say, okay, issuer, you need to change your offering back to 1.07 million, kind of like what we were doing in anticipation of it going up to 5 million. And then launch at 1.07 with your reviewed financials. And then if you choose to raise beyond 1.07 up to 5 million, you're going to have to get an audit in order to kind of make the amendment to the Form C. So a little bit aggravating and annoying and a bit of a surprise for many of the issuers and all of us who are preparing for it, but it is what it is. If that's the worst thing, I think we're all doing great, right? But it is new. It is new, and it is significant. But it's like anything else, it's something that we're going to have to deal with. But it shouldn't get in the way of the fact that there's basically a 5x on how much you could raise in CF, which is spectacular. That's incredible, right? And it was a 3-2 vote, right? So we kind of just got there at the SEC. This wasn't like a 5-0. This was this could have gone either way.
Could have gone either way.
Could have gone either way. So you need an audit, right? So it's still a lot more cost effective. You don't need the 1A. You don't need the FINRA no objection letter. But you do need very certainly you do need that audited financials, which is great news for the auditors, but it's another expense for the issuers, and that's the new news that Oscar was referring to that we're all kind of going through right now.
We are, and I will say the companies that were planning on doing 5 all of this halt said no, it doesn't. Go for the 1, and you can actually indicate in your documentation that if and when the 5 million is available, you may or may not pursue it. So I don't think the one question, well, can you do an audit while you're raising your money? Of course you can. Nothing's stopping you. They're two independent action. Audit is from a time frame. You raising capital is totally different. And I don't think if you got some momentum happening right now, go for it. I don't think anybody should halt their objectives purely because of this, because the reality is, look, face it, it's $5 million. A lot of us kind of sat back, and I was shocked, but I wasn't terribly shocked. So it didn't catch me way off guard. Like, I was looking for solutions. I was reaching out to auditors that would take on clients. First of all, at this stage in the game, usually auditors, if people don't know the game, I mean, most of them are busy at this time of year, full out doing public companies. They like to take April off to relax a bit, and then come back all over again, right, to do the quarterlies. So, but as Itan said, it's not a deal breaker at all. In my point, I think he nailed it. It's a 5 times like what we've had before. I don't think you're, spending audited financial statement for the ability for you to raise $5 million. And by the way, if you were doing a Reg D or Reg A, you would have done it anyway. You were heading in that path anyway. There was no way of escaping it in this path. So I think it's, you're right, catching you off surprise, but everybody's doing extremely well with it, which is very interesting, meaning they're being adaptive and rolling with it and just say, okay, I'll start with $1 million now, and boom, started going. So, okay, we'll come back to, obviously people will have lots of questions on that because there's still brewing out there. People thinking, oh, no, it's still, no, you're not mistaken. No, if you're really curious, I'm going to put it in a tweet, the actual rule, so you can all read it.
Yeah.
The rule is pretty clear on this one, as Zitan said. And it just got missed by some people. So it happens. With 700 pages in front of you, it's, you know, it's kind of hard to, you know, we can all finger point at it, but it is what it is. At the end of the day.
And it makes sense that we all thought that, because of the way it works for the 107, you know, the 1.0.
Yes.
First time issuers can raise that much, whereas second time issuers, you stop at 535. So it was reasonable that first time issuers at least would be able to raise the full 5 million. But yeah, it's a good thing they didn't have all of our faces on that webinar, because when the SEC, when they announced that on the webinar, a lot of people, I think, were jaws dropped at that interpretation. So,
well, it's there. There are, as I said, and as Zitan said, this is no reason to halt your offering, and there's no reason to delay it. While you're raising money, you can be doing your audit, and the money that you're getting could be used towards your audit. I mean, we saw this in people were doing RegCF to do RegAs, right? I mean, how many clients did we see doing $500,000 purely to do a RegA? So you're doing a RegCF to get to the bigger RegCF.
Yeah,
I mean,
yeah.
There's nothing wrong with that, and you won't lose any momentum with it at all, because every audience that you get, it's yours, so you can bring them back in. And yeah, so I want to bring one item of RegCF that I obviously got some opinions on it, but I'm really curious to hear yours, where you see the value in this. So I'll go with you, Michelle, first. Testing of the waters. So tell me why your perception of it, and why you think that would be good for companies.
Yeah, I mean, I have mixed feelings about this actually myself. I think it can be useful. I think that the platforms that are going to just allow anybody to come on and test the waters might not be a true representation of everything that's involved. For example, on our platform, we end up doing a lot of hand-holding. We do a lot of education and coaching, because regulation crowdfunding, like any other type of fundraising, it's part art, part science, right? And I think it's great that you don't have to tell someone you have to file your Form C before you can say anything. That is actually going to be, I know for our clients, that is actually going to be a good thing, to be able to test the waters, to be able to get out there. I think the most important thing is the reality check, that this is what it takes to be successful with RegCF. You kind of have to find your groove and get into it. And it's not necessarily a bad thing that people are able to test that out before they invest in, getting the process, the Form C filed. Although we are seeing more people who just want to get out a little bit ahead. They already know they're doing this, and they just want to use it to start pre-marketing.
Mm-hmm. Here's something I'm thinking out loud. When I'll say it, and I'll ask you, Tom, what do you think of this? I mean, so what is wrong with saying I'm testing the waters for 5 and I'm putting in a Form C to raise 1 million? I mean, like, I'm wondering, I mean, during the time because you're testing the water, because you may at that point file your Form C and you got to get your audited financial statements. So there is a legal mechanism for the companies to still attract the investor base while they're doing the work in the back end, right?
I guess, but at the end of the day, you're looking for some assurance that people care about what you're doing, and there's some type of likelihood that it's just giving you a little bit of that confidence, right? That's testing the waters. I also, Michelle, have mixed feelings about it, because people don't feel obligated to put their email and number and name and amount that they might invest in something online if they're not actually buying something. They don't. They're going to bail. That's a reality. And with all the offerings that we've done, occasionally there's a testing the water campaign. It kind of leads to frustration, because you're spending money it's a good point about spending money. You're marketing it anyway. You're getting the word out there, so it's not a complete loss, I guess. But our Oscar, our friend Andy Coren gave the analogy. It's that you meet someone at a bar and you say, "Hey, how's it going?" Great, how's it going? Hey, you want to get out of here and then go hang out? And they say, "Yeah, sure. Oh, actually, wait right here. I'm just testing the waters. I'll be back in a month from now." And then it's kind of like where it is, like you got to that point, but you're kind of, and so I've seen more frustration, frankly, in testing the waters. I think there's room for it to evolve. I think we just haven't figured it out yet. I think there's a way. It's going to require some more experience and some more thought and coordination, but there's got to be a way to really get value and get the information that you need. Maybe from the utilization of certain heat maps that measure people, and we're recording people going to sites and where they're looking. It just, more sophistication is needed. It's a great tool. We just haven't yet fully figured out how to unlock its real value, right? And once we do, I think more people are going to use it, right? So, but it is a positive thing. What I see though, with all of our involvement on the RegA side, is that people are simply using RegCF as a testing the water for a RegA. It's like, forget about testing the water. You're testing the water. You're raising money. It's not a big investment to get a RegA up and going, right? It's weeks instead of months. It's way less expensive. So it's kind of like you're testing the waters for a much bigger raise, but you're also able to actually get, not just get some, convince someone to leave their information to get back to them when you're alive, but they could actually follow through and invest in the offering in the form of a RegCF instead of the A. So it's evolving. These are all brand new type of things. We're kind of, it's where regulation meets innovation, meets technology, meets marketing, right? And it's literally we're the first ones doing this and having these discussions. So I think, I think we'll figure it out as we get a little smarter here.
Yeah, I've always discouraged anybody from it. I've never understood it. You go through all this cost and expenditure to test, and then you get a positive result. And then you're relying on that result to come back 6 months later, 9 months later, because what are you talking about? It's going to take 30 days. Yeah, in your dreams, maybe. But the reality is that we don't know what could be behind. I mean, the SEC could take another 3 months and they could ask you questions. And that's the gamble. This is I think what people are looking at it is, I'll test the water for 30 days and 30 days later, I'm going to get and it's going to all pan out. And the variable that I throw into the wrench is, what if they don't respond in 30 days? What if they give you more questions and it's now 60 days? Because I've seen clients for 2.5 years. So all of that after 30 days, it's gone, it's wasted. So I do agree with you. It's on the testing of the waters has nothing to do with collecting of the data. That's my perception. I don't see it as that. There is a bigger play here, and it has to be geo-based. It's part of geo, and it's part of specific geo. That's the real key, because clearly the message resonated well with whoever it is. And to Tan's point, they came, but they're not going to give you the real stuff if you're not, you got me all excited for nothing, but now you know geo, where they came from. And that geo component could be the key. Where others are so fixated on trying to collect names and email addresses, you're just going to get a junkyard, right?
Yeah.
Because there's no reason for me to tell you the truth, none whatsoever, right? It could go either way. So that was rather interesting on there. Let me pose another question then, and I'll start with you, Tom, because I think for you in your RegCF. So let's talk about your RegCF first, because it's going to be very different the way you're approaching it. First of all, you touched on it at the beginning. You're not a funding portal. What you're providing is a landing page. You are managing and controlling on behalf of the company, right? And it looks like a RegA, but it's an actual RegCF. But now with the accredited investor coming in, how do you see that materializing in RegCF for you guys?
Well, again, our model really has been, and the reason why we're so active in RegA and becoming more and more active on CF is that we untethered the issuer from some of the constraints of a marketplace-oriented approach towards crowdfunding, where we set up the issuer with their own independent landing page, their own dedicated domain, so that they can be the sole beneficiary of their own marketing and promotional efforts, which works really well for some issuers. Issuers who are very sensitive about their customers, their investors' information, or their users or subscribers or fans, or et cetera. You give up the potential upside of listing on a platform that might have hundreds of thousands of potential investors, but they also might have 150 other competing offerings that are way more sexy than yours, right? So our approach works for some, and for others, the assurance or the hope of being able to get picked up by simply listing on another platform could be more alluring. I think the idea of lifting the cap for accredited investors is very interesting, and it's going to become more interesting. And the reason why has a lot to do with the overall approach towards using these different regulations, sometimes in conjunction with other ones. So, for instance, you see a lot of folks who are issuers who are combining launching a RegCF and also a RegD. The thinking behind that is that let me create two different doors into my company with different terms. One is designed for the $500 investor who is targeted on Facebook and wants to put an investment into my company on a credit card, right? And perks and perhaps a higher valuation. That's the reality. That's what we're seeing, at least, and which might not be that appealing to a more sophisticated or an investor or an institutional investor. So they launch a Reg D with different terms, and they hope to use the Reg D to go knock on doors the old-fashioned way to get people to invest bigger check sizes from institutions, from accredited investors. That's not ultimately unlocking the true value of democratizing access to investments. Ultimately, it should be the little guy and the big guy are at the same place, right? The mom and pop doesn't care about the valuation or doesn't understand valuation. So let's give him a decent deal, but let's give the institutions who are going to look at comps and really explore this and challenge us on this, another avenue to get in and give them better terms. Something about that, while it's legal, right? You see it being done, is not ultimately where I think this should be going. Where I think ultimately this is going is giving the average Joe like us the ability to invest alongside VCs and institutions at the same valuation, at the same terms. We're seeing that. For a great example of that is one of our clients, Gage Cannabis, that recently raised $50 million in a Reg A, of which over $20 million came from institutions. Same valuation, same terms as the smaller guy. That's where this is going. And I think that by extending that invitation for accredited investors to invest as much as they want in a Reg CF is going to change the dynamics of how the CF is being utilized, so that bigger investors can participate. And that's going to be very beneficial for some of the smaller investors, from some of the non-accredited investors, to have the confidence to say, look, if a institution or a significant investment from a group of accredited investors came in at these terms, I'm not the first one in. It gives me a greater level of comfort if I see an institution that's done their diligence and in the deal. If I'm a non-accredited investor, and I think that's the direction this is going in. And we're not going to see it immediately, but I think ultimately we're going to see more of that.
Yeah, that's interesting. And Michelle, obviously, you're running a funding portal. So obviously the whole attraction was the non-accredited. Now the accredited is going to come in. Hopefully you'll come in. Obviously, are you going to be targeting the accredited? Is the messaging going to be going, or is it still going to be very generalized to the general public? Or how do you see that panning out for you?
I think it's true kind of across the space. We definitely have seen more activity from accredited investors than non-accredited investors. The non-accredited investors have been boxed out for so long that the education hurdle to get those people even aware of the opportunity to invest in small businesses and startups is more of a challenge than I really anticipated. There's a lot more to educating, but I agree with Etan that those are the most important investors. Absolutely, the democratizing of capital is what this is all about, and leveling the playing field to as much as possible. And I agree that it will evolve, but I think that the investing side by side is a good thing for both parties. Absolutely, we actually have a investment club called Angels of Main Street, and have everybody, people who are completely divested from the public market, which is extreme, all the way down to the person who's investing their first $500 because there isn't an income requirement to participate. So those kinds of things I think are going to help us help the non-accredited investors come along and become more confident in making these kinds of investments.
No, it's rather interesting. I agree with both of you, and I think one thing that we are noticing immediately is one of the key indicators to the success of RegA, as Etan was alluding to, which is going to trickle down, I personally believe, to RegCF, to his point, is when you got to look at real estate. And real estate is a really good indicator for everyone because it has been the cornerstone to accredited investor. It has always been for accredited. They've never had a need to go outside of it. There's enough capital there. Why go over here? I can fill the well quickly there and so on. So when you see one of the top rated online real estate platforms convert to a RegA, something's changed, right? Their RegA has finally come home. And I attributed it to this. It's not so much as Etan said, the investor investing alongside the little guy or anything like that, because that's part of it. But the other part is the accredited investor doesn't have to go through all that data sharing that they're required to do. Like most people don't realize they're not just asked for their ID and AML. No, they want tax returns, copy of your assets. They have to knock the door on IRS to see if you really are who you say you are, all of that. And so that's that. They don't have to go through that anymore. They basically provide enough information to meet the requirement. And then we're not done yet. And then they can be incentivized. So meaning if they put in more money, they can get gifts. I mean, I've had clients that have gotten beer, vodka, and they've gotten knapsacks. I got one that's giving away parts in a movie. I mean, it can be very creative. It's a win-win. And therefore, everybody who can contribute can be participating. So I think the accredited investors finally realized, I should say, they're starting to realize that these deals are no different than these. And with COVID-19, which I believe was probably the biggest catalyst for all of us. So I do see the accredited investor having a major impact in 2021 in big numbers. And I feel bad for those companies who are doing Reg D offerings where the investor is going to say, well, wait a minute, I just invested in a company where I put in 50 grand and all I did was tick off the boxes. And I wired my money through. And did I mention that my security's free trading? It's no hold. Right. This is a really important piece, right? And it's going to lead us into Reg A, is that it's a free trading security. Yeah. On a Reg D offering, the investor is not equal to the little guy. In fact, the little guy can go cash out faster than they could. The big guy has to stay in for minimum 12 months and can only be then sold to another accredited, where the little guy can sell to anyone, in fact, anywhere in the world. So it's rather ironic that the regulators balance this out really nicely. So no, I'm extremely excited. I saw a prediction today. I'll share with you. The prediction today was that RegCF will hit over $1 billion, and that there will be more than triple the amount of issuers and triple amount of shareholders, investors. So
what's the timeline for that?
The next 12 months, right? So and look, I'm a numbers person. I'm data driven like most, The numbers are pretty astonishing for RegCF. So I'll give most of you, if you didn't see my recap, there was 1,100 companies that went through it in 2020, which is fantastic. It was an increase over last year. 229 of them were $1 million. So that's another big milestone. That's 229 million right there, or more, just a little bit more. The average raise was 308. So for anybody thinking the 5 million is going to be simple, we have to go through these stepstones. So, but the big number is that we still haven't hit, we haven't hit over 2 million shareholders, investors in RegCF yet. So we're still under 1 million. So when you got 233 million Americans, we have quite a bit of opportunity to go to reach everyone. So this is part of it. It's educating the investor what the opportunities are, the companies on how to utilize it, and then of course the two of you, a registered funding portal with FINRA, and then of course a registered FINRA broker dealer registered with FINRA as well, which will be really exciting for companies to choose from. So I want to turn the attention now to RegA. RegA is really, as I mentioned, it was rather interesting how we're seeing the RegA not be this isolated regulation any further. The significant change here from it all, it's just purely dollar amount. And Itan, obviously your firm has done, as you said, 100+ deals already. So give us a recap of the regulation, and love to hear your comments on it.
Yeah, it's interesting. I've been so focused on RegCF, and which is a total different animal from any other regulation that we've been working with over the last 16 years. A lot of sensitivities, a lot of nuances, Oscar, as you know. And on the RegA side, look, it's affected us a lot, the increase to 75, perhaps more than many, because we were early at this, and we've been fortunate to be the broker dealer of record on a number of the most successful RegA offerings in history. Issuers that actually raised the full amount, right? The 50 million or 40 million, whatever they went for. So it's applicable more and more so to us and to a growing number of our issuers. The level of sophistication of the issuer has increased dramatically over the last year, dramatically. In my opinion, RegA really only became a thing in like 2018 or so, and it just started picking up a bit, 17, 18, and it's just kind of grown in significant ways. We now have a great example is we have a it's not yet public, but we have a New York Stock Exchange publicly traded REIT, Real Estate Investment Trust, and they're going to be launching a RegA with us, and they're offering yield. They're offering 6% return to investors, backed by 60 shopping centers, many of which are anchored by Walmart and the like. 50 bips a month, right? 50 basis points a month is what they're offering. It beats what you're making in the bank. But the idea of it now going to 75 got their attention. So I would say that the increase from RegA from 50 to 75 is just another showing of confidence from the regulators, I think, that broadcasts to issuers who are considering, who have been learning about and talking about at a board level this whole RegA thing. It had this combination of marketing and capital raising, this expanding of our shareholder base, while also hopefully raising significant money as a means to grow your company, or as a means to ultimately go public. And I think that it's a real alternative to not just seed capital and Series A or Series C, but it's a real alternative to venture capital and private equity at this level. And so the 50 to 75, especially from some of the sophisticated private equity firms and venture capital firms that are now working with us to run their portfolio companies through the RegA process one after the other. Because once you figure out the data science behind conversion and technology and marketing, it almost becomes somewhat of a widget, right? Whether you're in artificial intelligence or cannabis or psychedelics or real estate or financial services or biotechnology, these are all very interesting investment opportunities and industries. And once you figure out, okay, for every dollar I spend on marketing and advertising and promotion, how much is that going to yield me in proceeds into my raise. And when you figure that out, it applies for different industries as well. So you see a greater level of sophistication. You see publicly traded companies, NASDAQ, New York Stock Exchange, that are going to be using this. 75 is a big jump. And it was already going in that direction, right? It was already going where folks were starting to raise 50 for the first time in history. And it couldn't be better timing now to now say, okay, no more excuses. Now you can raise 75 per year. And so
yes,
we're pretty excited about that. Per year, right? Yeah.
Per year.
Yeah.
And let it be known that Commissioner Hester had indicated at our last KoreSummit that they were actually looking at 100 million. And I think once they move to that direction, I think we're already changing Series B and C, in my opinion, from a capital raise. You go to the 100 million, you just opened up a brand new environment. And I think it's going to be very interesting. Funding will compete for the opportunities now, which is great. I mean, we saw that in our own opportunities. So it's, it's pretty exciting. And it's interesting that the only thing that dramatically changed in RegA Plus was the increase. But that increase itself, it stimulates other components. I think it just brings everybody into this ecosystem saying Regulation A, and then you'll say, well, listen, if you want to test the waters, why don't we use RegCF? It's rather interesting how they flow. So Michelle, obviously as a funding portal, how are you going to address RegA and work with platforms, with BDs like Dalmore, or what strategy do you have for RegA at this time?
Yeah, I mean, we're definitely taking a look at that. We've been seeing some people in the communities using it very creatively to do things like in Oakland, for example. They're doing RegA, and they're doing a community ownership of housing. And so I think those real estate offerings are definitely huge. So we're definitely interested in that. We're using RegCF as kind of an economic development tool. And I think that ultimately for those bigger numbers, so for example, an issuer I'm working with that's a senior housing developer, I mean, they're just going to need a lot more than $5 million.
Yes.
Yeah.
But that's where you come. So, sorry, Itan, I didn't mean to take it away, because I know what Itan, I hope we're both going to say the same thing. But this is where we didn't see this in the early days, but it definitely is here now, where the funding portals are partnering with the broker dealers, because see, the crowd is ultimately the same. Sorry, Itan, you were going to say?
No, I'm sorry to cut you off. Yeah, absolutely. We're seeing that. I think we were perhaps the first to really explore that, and have been active in that we've partnered with CF portals that allow for them, because CF portals are not broker dealers, and right, so they're not allowed to charge commissions or be paid success fees on anything other than CF, right? They can't do Reg D and Reg A. But what happened? But they also, Michelle, as I'm sure you guys are doing, you're building up a database of investors that and you're building up a reputation, and you have issuers that may have success with you, and then have greater needs. So the question is, can you leverage your network, and could you provide additional services that allow for your CF issuers to launch a Reg A on your platform? And the answer is yes, you absolutely can. And so how do you do that if you're not a broker dealer, right? So how do you do that? You could charge a fixed, the CF portals could charge a fixed fee, right? I'm not going to mention names, but there's a number of amongst the largest out there are working with us right now, where there's a clear advantage of giving that continuity to your CF your CF issuers and to the investors who participated in them, to simply partner with a broker dealer like Dalmore. Dalmore would onboard them in the typical way, the Reg A, on the Reg A side, but we could list the Reg A on your CF portal. You could charge a per investor technology fee. You could charge a fixed fee. As long as it's compliant, you're able to provide that. So it's an amazing thing that we're seeing, and it could appear very, very seamless, right, from the CF right through the A, aside from the disclaimers and disclosures and process and diligence, et cetera, that goes on kind of in the background. but we're seeing that more and more so. We're also seeing it, by the way, with non-broker portals, not even CF portals, but anyone who has a community of investors, potential investors, a community, and access to companies that want to raise capital for their business could create a very unique ecosystem on their own portal by partnering with a broker dealer that could provide CF or A services to them. And they could do a very similar thing by charging a listing fee or a marketing fee or a per investor technology fee without even being a CF portal. And that's something that we're working on as well right now, which is fascinating. It's just, there's clearly going to be a lot of growth and there's clearly going to be a lot of consolidation in the space, right? But it's pretty fascinating as far as, how, the ability for entrepreneurs to monetize their platforms, their network, the niche that they play in really does exist. And it's something that we spend a lot of time focusing on now.
Yeah, it's a far cry from when we first got started. Nobody really knew what you could and couldn't do. It was today, there's a better, clear path. There's still, goes without saying, always get advice from your counsel either way, because here we're just giving you examples for those portals or anything like that, because you should be talking to your counsel at all times to make sure that what the activities you're working on, because there are some changes coming down the road from FINRA, that's in the SEC, from what we understand. All these increases mean that we're going to be under the spotlight to make sure, and which we all are. This is not towards anybody in particular, but it's just illustrating the success of the Jobs Act that we're having today. So it's pretty exciting. I mean, I often reflect back. For me, it's 11 years. I really had to I had to go back to one of my journals from 11 years ago to read what I was thinking about, where this was going. And it's rather interesting that, you could, with everything that's going on, you can't go micro, but you can timeline certain things, milestones that are being hit each way along the way, that eventually that's what we call the curve. And we're not there at the curve yet. Everybody thinks we are, we're not. We're not at the curve yet, which is interesting because, so what's it going to be? Is it when RegCF gets increased to 10 million or 20 million, right? So if that gets moved to 20 million, that's 5 times again, or 4 times, right, from where we are now. That would mean, what do they need to do to RegA? If they even move RegA to 200 million, that's it. As far as I'm concerned, Reg D 506Bs and Cs are done. That's just me, because you got to look at the allocation of money. Every year, 151,000 companies are raising capital in the United States, and crowdfunding has finally made a dent. So the question is, as you increase the limit, where's that limit? Where's that coming from? What's coming from an existing industry that's relied on it, and that investor, the good thing about them, they're coming along this way. That momentum shift has started. Nobody thought we could take it, to the work that you're doing it on. I mean, that last opportunity that bringing an institutional brought the spotlight. That's it. The spotlight is here. Now, who will be next? Who will be the next one that brings in an institution to a deal? And then it'll be another one. And then the real key will be when we start seeing VCs co-investing with the crowd, not small amounts, but I'm talking, $500,000, $1 million like they normally would, but putting it alongside with the crowd. Now that will be a game changer for both RegCF and RegA. I believe that's our next frontier that we have to come up with. So I forgot, it looks like we do have a question here from Richard. I was gonna just say, anybody have a question? It looks like Mr. Ross has a question. Please, sir.
Thank you. I think you've been too modest with your success because you overestimated the numbers. You said fewer than 1 million have invested with RegCF, and have 255 million Americans. But that's the wrong statistic, I think. There are only 128 million households. And yes, 50% of households own equities through their 401ks or retirement accounts. But you say, how many of those households own equities specifically, directly? It's like 14%. So the market of people who buy stuff is like less than 25 million, 20 million. And so you have 1 million people out of 20 It's not 1 out of 253, it's 1 out of 20 buying. That's amazing. It's 10 times better than you thought. So congratulations.
Oh, thank you. Thank you, Richard. I appreciate it.
Thank you.
Good comment. Good comment. Well, that's the beauty of data, right? We're going to see more of it, and it's going to allow us to be able to grind it down. Obviously, the number that we've been going is just a population base, but the information is becoming more available. One thing I'll leave both of you with that hopefully it will give you, I'm sure you feel fantastic about how great the day is, that up until the Jobs Act, there was no visibility to 98% of the market. And that's the sad reality and opportunity. So sad and opportunity. And the Jobs Act really was, imagine the foresight the individual had, David Wheel, to say that there was a problem in that 98% that nobody else could see, right? And the only reason why nobody could see it is because it would only take one to spread out. But again, nobody tracked it or anything like that. What does that mean? Up until recently, less than 2% of companies were being tracked, and that's venture-backed companies. And it's regrettable because in crowdfunding or alternative finance or whatever you want to call it, we do have unicorns, we have companies. It's just their shareholder bases are larger. But that doesn't mean, and now with this, we're going to see more visibility into the companies and the investors, who they are, how they invest, right? That's going to be the key matrix coming forward. So, Michelle, wishing you all the best in your journey with your new platform. And I'm happy to hear that. But for everybody else to know, what is the URL for your domain?
It's www.crowdfundmainstreet.com.
Thank you. And Etan, as always, everybody knows how to find you, but just in case you don't know where to find him, he's on LinkedIn, I think. Yes, he does. But you can find all our speakers, their bios, their contact details at KoreSummit.io. You can watch this video again on our YouTube channel, or our KoreSummit website. Till next time, thank you so much, everyone. And let's not forget this day. This is a very important day. I'm going to make a note to bring you both back as we reflect back a year from now to see if we were right. And I'm sure we were.